Welcome to this special edition of Business 7. FirstRand Namibia this morning announced their latest set of results, and we were lucky enough to get their top management in the studio with us to take a closer look at what happened. We've got Conrad Dempsey. He is the CEO of FirstRand Namibia. Welcome, Conrad. And also Oscar Capelao. He's the Chief Financial Officer of FirstRand Namibia. Thank you for your time, gentlemen.
Thank you for having us.
Morning, Jeremy.
Right. We already have the first impressions of analysts out, and we're going to take a look at that quickly. Sirius Securities, who said overall FirstRand Namibia Limited delivered a strong set of results, both standalone and relative to peers. Simone Storm came in saying, "This is a good set of results for the FirstRand Namibia Group, exceeding expectations, as well as reaffirming our buy rating on the stock. Investors likely to respond elated." And IJG Securities said overall FNB's results are impressive, given that the economic environment remained challenging and came in ahead of our forecasts for the most part. Gentlemen, it doesn't get much better than that. Congratulations. Conrad, let's quickly elaborate on the point that IJG made, saying that you still operated in a challenging economic landscape. What was it like over the past year?
Yeah. So Jeremy, I think everybody is well familiar with what the economy went through over the last year, all years, and the challenges that went with that. And any banking group is very directly plugged into the economy. As a management team, we always say our duty is to deliver sustainable results and sustainable value for shareholders, irrespective of where we are in the cycle. Now, the only way we can do that is if you really deeply understand where the pockets of opportunity in the economy is. There's always opportunity. And then if we do actually meaningfully solve for the problems of the day, if our clients don't succeed, we don't succeed. So I think it's a wonderful culmination of realignment of our business, of really understanding the economy, and making sure that we do bring real contextual solutions that make sense for the man on the street, up to the biggest corporate, to the market in this time.
Oscar, you are also a pilot. And nowadays, I suppose you are extremely impressed by these soaring results of the FirstRand Namibia. In a nutshell, what are the financial highlights and how did you achieve this performance?
Let me latch on to the points that Conrad just made. The macros matter. And if we compare the current 12 months compared to the previous ones, with COVID restrictions being lifted, free trade, more flights into the country, tourist arrival, one definitely gets the benefit of a better open environment in the economy, more trade taking place. So that already gets us going well. And then internally, it's managing costs. If you look at as to what's the biggest cost line we have on our income statement, it comes through staff costs. Last year, our employees had to settle for settlements of 3% salary increases, and that meant that at least we were managing the cost line while we were still in the challenging economic times. And then from a banking perspective is the unwinding of impairments provision. As the macros improve, we are able to release some of our portfolio provisions, and then also the impairments charges you're seeing from bad debts, it starts normalizing. So there also we saw a relief coming through our numbers. And then in the second half, with a growing balance sheet and interest rates rising, we also got the benefit thereof. I mean, a line that was flat, that's our non-interest revenue. That line was flat, but again, it's something that we deliberately took strategies on to keep flat.
I quickly want to touch on the whole issue of impairments. It's very difficult for the man in the street to really get his head around what impairments are. And if you can maybe just put that into perspective for us, and also the fact that the picture now is looking rosier. How did FirstRand manage to turn around the numbers?
Allow me to be slightly technical on impairments. The impairments charge one sees on the income statement does not entirely refer to write-offs. We are required to make forward-looking predictions. I mean, we speak of expected credit losses, and that's the line you see there in terms of stage 1 and stage 2. So we take into account our house view, which is our outlook on GDP, credit extension, interest rates, and through modeling, we are required to take expected losses upfront. So 2 years ago, as we entered the pandemic, we already front-loaded expected losses as we had modeled based on available economic data at the point. And as things play out, the economy is starting to perform better than what the house view was in the comparative period. You do see some of the releases coming through. And then, I mean, in the current environment, there's still uncertainties. I mean, where inflation would peak, interest rates would peak. So there's always a level of judgment going in, but it's again us trying to manage the quality of the book through the cycle. So when you look at impairments, it speaks of taking into account what has happened into the past and what's our forecast of the future, but it doesn't speak of purely write-offs. It includes a level of judgment to take into account managing the quality of the book. And when you see that line unwinding, and yes, it plays out in our numbers, but globally, when you start seeing in this reporting season results of banks, that's a line that you'll see the benefit coming through, is taking into account that the world is better than what we had anticipated before or as we entered the pandemic.
Conrad, coming back to the figures, your profit before tax significantly north of 1.5 billion. Analysts already saying that these are numbers going back to about 2016, so getting back on track. We all know what the reaction is going to be. Why are the banks making so much profit? That not quite the issue I'd like you to touch on, but why is it important that the banking industry is profitable? What does that mean for the economy and to the people of Namibia?
Yeah, sure. Do we have 2.5 hours? So I think if you take a step back, banks are actually very simple organizations. And our group is 90% plus still made up of banking profit. And I think it's important to understand, within a bank, it's not our money. We only have two sources of funds. We've got depositors' money, which is the vast bulk of it, who gets rewarded through interest. And then we deploy that in a very meaningful way, and there's some equity holders, which is mostly pension funds, and they get rewarded through a dividend. Now, there's quite a bit of risk that, banks are the business of risk. So if you think about it, you're investing into an organization that's going to give money to other people and hope they give it back. And that risk needs to be rewarded. And that's why I think the economic cycle of banks is quite important, that there's adequate reward for the risk that we're putting other people's money to. And which is why I think also this year, the return to our shareholders on dividends, which over time, throughout this pandemic cycle, our shareholders have taken on risk that was unusual for history. We've never had a risk event like a pandemic. And that's why it's nice where we've got a strong enough capital base, we're taking a forward-looking view, and we're able to really say thank you to our shareholders with a very decent dividend going into the pockets of individuals and pension funds, and roughly half of that is Namibian investors.
Very much. So I think often when we talk about the shareholders, people forget that a lot of the shareholders come in the form of the pension funds and indeed your ordinary man in the street who is benefiting from a bank being profitable and being able to declare dividends. Quickly, another matter, we know this, we see this every year. There's a reaction when it comes to the profits, and then people immediately go and say, oh, it's all about the fees, etc., etc. Just put the fee issue for us into context.
Gladly. I think fees is one of those things where the banking industry had to take a long view in the mirror and say, is the historic models sustainable? How does the future of banking look? And there we've really taken an approach to say, what is the right thing for a sustainable long-term banking organization? Over the last year, we've put more than 100 million of value that we shared back into the pockets of our customers. And that's through pricing reviews, where certain products were just made completely free. Some areas pricing was reduced. And through schemes like our reward schemes, we physically gave clients cash back. So I think there's definitely a real understanding, and it's the right thing to do, to start to share some of that value back. I think also if you look at the kind of products that's coming through in banking now, we launched the DigiPlus account, which is an entirely free account. So you can transact for free. You pay a transactional fee, but you've got free access to banking at any time. We've got more than 1 million active e-wallets, but these are people who didn't have access to financial services because quite often it's expensive, it's cumbersome. And with solutions like that, we both make it easy, we make financial inclusion easier, but we also make it so affordable that your entry into it is completely free now. And I think that runs all the way through. I briefly spoke about rewards, and if you go all the way up to our wealth segment even, if you manage your reward structure correctly, you get more cash back in a month than all your fees, so you can actually start to bank at a profit.
Yes.
So I think it's a very exciting tilt in banking that's happening. And I think the way that banking is becoming more accessible and more cheap obviously means we need to think about different ways that we create value for shareholders. We need to be smarter about it. We need to, as Oscar said, manage our cost base tightly. But I do think that this era we're in of accessible, affordable banking, that's really relevant. I think it's an era that's here to stay.
Oh, that's wonderful news. Oscar, just coming back to you for a moment. FirstRand Namibia, so much more than just FNB Namibia and RMB. Can you elaborate on the group and maybe also just give us some financial highlights of the segments?
Absolutely. When you look at FirstRand, we go to public with RMB as our corporate and investment bank, and then FNB represents our retail and commercial side of things. And if we zoom into the growth in advances, RMB did exceptionally well. Our advances grew there by 16% of the 33 billion we've extended to the local economy. And when I look at the balance sheet again from a deposit perspective, commercial came through for us, growing there by 14%. Retail, by virtue of its size, regardless of growth rates, it's significant in its size because again, that's where we bank individuals, and then in the business sector, if you start from SMEs right up to mid corporates, and RMB deals with your large corporates. But if you look at as to where our growth comes in, yes, FNB, that's where the retail banking is, and home loans again takes up the bulk. It's 46% of our advances, and that grew by 5%. In terms of an area where we haven't seen much growth in the retail space, that's in the vehicle asset financing. Again, the lack of stock, the floods in Durban, supply of chips, and the reasons have been many, and also individuals sitting longer on cars, given where the environment is. But the one thing we've seen turn around is in the commercial space, businesses are starting to acquire trucks and delivery vehicles, and at least there we are seeing double-digit growth. So that's really, when you look at the growth of our balance sheet, it's the segments reacting differently to our current environment, where you still see single-digit growth in the retail side of advances, but in the corporate space coming through with double-digit growth. On the insurance side, our JV with MMI and OUTsurance, that also contributed close to 60 million to our bottom line, and the Ashburton business where we have our asset management business that also contributing to the bottom line. So our result is not only made up by banking, because yes, we also have an insurance arm and an asset management arm, but yes, banking is almost 96% of what we do. But in terms of when it comes to extending credit, there you can see our contribution to the economy of 33 billion, and the bulk thereof going to the retail space in terms of home loans. But otherwise, if I can put it into perspective, the Namibian size of credit is 108 billion, of which we have the 33, and the growth was roughly 3.5 billion, of which we advanced the 1.1 billion. So we are definitely a significant contributor to credit in the local economy.
Gentlemen, moving a bit away from the hard financial figures, FirstRand Namibia really focusing on the goal of doing what matters. We're going to come back and discuss this in a lot more detail, but first let's take a look at a video around the matter.
What matters to one often has consequences for many. What matters to communities has potential to make or break nations. What matters to a company affects people. And what matters to those who have has impact on those who don't. Over the last 10 years, the FirstRand Namibia Foundation has carefully invested over 85 million Namibian dollars into doing what matters throughout Namibia. Working on behalf of FNB Namibia, RMB, Westbank, Ashburton, and Point Break, the Foundation's continuous investment countrywide has meaningfully impacted the lives of over 1 million Namibians, driving systemic change in education, delivering skills development, providing environmental protection, supporting health promotion, and encouraging sports and arts and culture is more than charity. It's a reason to get up. It's what makes us human and reminds us that companies need people who believe in the same things. Every day, the people of FNB, RMB, Ashburton, Westbank, and Point Break work to make a positive difference daily in what we do, in how we do it, and in sharing what we deliver with our communities. The very act of doing what matters inspires us to be more than a bank, more than an investment house, more than advisors, delivering more than we believe to be possible daily. From the neediest rural school support to countrywide educational materials investment, to inspiration for budding school journalists, and to national panel debates on Namibia's future, to government disaster relief support in times of national crisis, to celebrating talent and protecting local heritage, to delivering affordable housing solutions and introducing renewable energy solutions and green bonds. What matters to us is doing the right thing.
What a massive spectrum that is, and how inspiring to see the level of commitment. Conrad, doing what matters. Where does it come from and what does it mean to FirstRand Namibia?
Yeah, it's a very nice story. You know, it all goes back to purpose. And some time ago we sat and we said, we've got a meaningful role to play in the future of the country. And in terms of what we do, our skill sets and our capabilities, How best do we do that? And what Namibia really needs at the moment is significant domestic and foreign investment that can meaningfully create jobs and opportunities. And in order to create that, you're competing for capital. You're competing for financial capital, you're competing for human capital. And we believe we've got a role to create a big step up in that competitive posture of Namibia to attract the right financial and human capital to get this economic engine really going. And then when you say, okay, we commit to that purpose, we're going to do that and we're going to meaningfully play that role, it does then say, well, you've got to be focused. These are things that don't just happen by themselves. And that's where this analogy in the building started to, or the organization started to grow to say, no, you've got to do what matters and think about what are we busy with every day? Does it matter? You saw about some of the stuff that we're doing through the foundation just now. For the people and the communities and the projects we help there, it really matters. But it goes well beyond the foundation. It goes to how we do business, with whom we do business, the kind of solutions we help them with. These are things that matter. One of the good examples we had this year is we created an entire dedicated unit just working on business rescue, rescuing business big and small. And we've deployed people in there, businessmen and women who really understand business. Oscar earlier had on the screen the credit loss ratio. And you could see how that meaningfully made a difference and it mattered to those businesses. Because if your credit loss ratio goes down, it means that there's less and less defaults happening, that we're able to turn the fortunes around and for viable businesses, get them back onto a steer and to help play a role in the economy, invest in the economy and get the country more competitive. So it's a bit of a cycle that feeds on itself. And it's something that keeps us every day honest when we look in the mirror and we say, are we busy with stuff that matters?
Yes.
And does it actually make a difference? Yeah.
Oscar, coming back to a bit of numbers, in terms of where you are invested in, the sectors, etc. What is the situation at FirstRand Namibia?
From a retail perspective, we are representative of the sum of individual balance sheets. So those who need credit, you'll see it's lending for housing, lending to get a car to drive to work. On the business side, again, it's backing office buildings. So if you look at the economy, in terms of tourism, yes, we back tourism. Yes, we back agri. And in the corporate space, yes, we have mining clients. So when you look at the FirstRand, we are bankers to the economy. That's really in terms of where are we playing? Yes, we have our risk appetites, but we are representative of Namibia. So when you see success on our side, it's because we have successful business people out there. We have successful individuals. So when you're looking at the quality of our balance sheet, you're looking at our savings pool in our deposits, is the collection of all those decision making taking place at all times. And like we said, our segments, again, when we go to market with RMB, is having specialists to back your large corporates. When you look at commercial, it's again banking that level of businesses. And then in the retail space, again, banking from a student right up to your professionals. And that's where we are. As to who are our clients, Namibia is our clients.
In terms of the growing importance of green investment, how important is that to FirstRand Namibia? You're welcome to.
Okay, so I can take it.
Yeah, if you want.
So I think, green can't stand on its own. And if you look at at the moment, almost you can't open any business newspaper without it talking about ESG. So yes, environmental is important, and it's always been a cornerstone important item for us. From having the first sort of green-rated building, supporting renewable energy, we issued a 6-time oversubscribed $350 million green bond this year. But it doesn't end with environment. It ends also. It really goes into society, and I think societal impact for us in Namibia is quite relevant. And then the governance around that. Really playing a role to make sure we've got good governance around the country in our institutions. And you also see that where we make investment, there was just this nice video on about the foundation. And one of the items there is, a few weeks ago, we gave $5 million to Development Workshop, who developed accessible land for accessible housing. Now that for us is a real good impetus of where the link between society and environment starts to interplay. The moment you've got access to decent housing, decent sewage, the environment benefits, the way people live, the multi-generational wealth that starts to get to be created when you can leave a house behind. So these are all interplayed. But I think on green, whether it's green or society or social, what's really important for us, it has to matter on what's relevant in Namibia now. We don't chase a tick box of some agency in the US that say you got to do these for your green credentials or for your societal credentials. We're on the ground here. We know what Namibia needs, and we really deliver into that. I suppose to come back to say it's doing stuff that matters.
It's a developing conversation in Namibia at the moment, and it's becoming rather controversial because there are maybe not such a subtle pressure coming through that banks need to be very active in the short-term boosting of the economy. How difficult, or how important rather, is it that banks like FirstRand or groups like FirstRand Namibia stay focused on that long-term strategy that not only builds the economy but allows it to become and remain sustainable?
Yeah. So, Jimmy, I think there's two parts to your question. The one is, and you can't split the short and the long term. You know, where we are today was 10 years ago is long term, and the decisions we made then affects us today. So I think, obviously, if you consider that our equity base is primarily pension funds, that's a long game, and people will need to retire off this 10, 20, 30, 40 years from now. So success is not measured over this year. But the reality also is the economy needs certain interventions now. The economy doesn't need interventions 30 years from now. So we've got to make good decisions to make sure that intervention to really help boost the economy is effective, does work. And I think when you look at where FirstRand's private credit extension ratio is running versus the market average, we've definitely strongly taken a very bullish approach. It's within our appetite, and we are putting in significantly more than our traditional market share to really help that boost get back into the economy. If you do it in a sensible way and you understand what you're busy with, I think there's great opportunity, not just for the clients and the economy, but for us to also leverage long-term value out of that.
Just as a wrapping up of the program, in terms of parting thoughts, before you share anything else from your side, Oscar, I'd like to return to the issue of the dividends announcement in your results. Can you give us the numbers, because they're very impressive, and once again just explain that this is really to the benefit of ordinary Namibians?
We touched on our shareholding earlier, because if you look at the top 10 shareholders, there's no pension fund in Namibia that's not a shareholder of FirstRand. So again, what we pay up to shareholders gets invested in the local economy, and then also ends up being paid out as a pension to the pension fund members. I mean, either the active ones as reinvestment, and then the pensioners also benefit from it. But it's again the multiplier effect when you have a flow of funds in the economy. Yes, given our capital levels, given our good results, we were able to have the 320 cents distribution now compared to 112 cents last year. So yes, it is significant, but it's again on the back of the earnings performed by the group. And it's really one of those things as to get the multiplier effect in the economy, you need that flow of funds to come through.
How much will the total dividend payout amount to?
Now you are testing my
That's
memory.
what you're here for.
Our total dividend should roughly be 850 million, of which then locally we're speaking of 430 would remain. I mean, if one also takes NRST, etc., it stays, but it's also then dependent on the share register when we do payout. So these are rough numbers, but we would be deploying 850 million into the economy.
Oh, it's like music to everybody's ears, that, isn't it? In terms of parting thoughts, Conrad, anything from your side?
Yeah, I think, when we look back at the year, it's definitely results we're grateful for. I think these results didn't come just naturally. There's a lot of hard work that went in with clients. There's a lot of work that helped clients to be successful. And as Oscar also earlier said, our success is a factor of our client base's success. We don't trade with ourselves. We really look forward to a great another year. I think some of the initiatives that we started is starting to get some nice momentum. And if you sort of pick up the bits during today's discussion, the diversification strategy of the group is getting nice momentum where we really become a financial home for people throughout their life. Whether you're young and just starting out, or you want to save a bit of money through Ashburton, or you need insurance for your first car, or you need to go study, or life happens and you need help. That really integrated financial home is something that's coming together very nicely. And I think over the next year, we look forward to a fantastic year with the rest of the country.
It has been wonderful to, for a change, be able to share good financial and economic news. I think over the past few years, we've, you sort of like dread financials, because it's just this mirror of in how much trouble the economy is. So thank you very, very much for your time. That is Conrad Dempsey, the CEO of FirstRand Namibia, and Oscar Capelao, the Chief Financial Officer of FirstRand Namibia.